On July 26th, the biggest shock in the market is the June jobs report. Non-farm payrolls added just 57,000 jobs, a massive miss compared to the consensus expectation of 115,000.
While the headline unemployment rate technically ticked down to 4.2%, this is a mathematical mirage. The labor force participation rate collapsed by 0.3 percentage points to 61.5%, meaning the unemployment rate only looks stable because hundreds of thousands of workers dropped out of the workforce.
The household survey exposes the real depth of the slowdown, revealing that employment plunged by 507,000 in June alone. We are seeing a clear rollover in labor demand that the headline establishment numbers can no longer hide. This weak economic data is triggering a massive sector rotation. Investors are shifting capital out of high-flying technology names and rotating into value and defensive sectors, driving the Dow to all-time highs, led by financials. The technical damage in the semiconductor sector is severe. The SMH Semiconductor Index crashed 9.7% in the first 2 days of July, breaching key levels to test its 50-day moving average. This sell-off is worsened by emerging credit support risks. Nvidia has reportedly launched financial guarantees for its neocloud compute partners to secure GPU orders, a structure that mirrors Cisco's controversial vendor financing model in 2000. Meanwhile, downstream monetization is lagging. Mark Zuckerberg admitted in Meta's internal meetings that AI agent development and monetization speeds are not meeting Wall Street's immediate expectations, cooling enthusiasm for massive hardware spending. This high cash burn explains why OpenAI is conceptually discussing a 5% U.S. government equity stake to secure compute resources and regulatory favor, signaling a shift toward national AI industrial policy. On the policy front, 42 Macro argues this K-shaped AI-driven inflation means the Fed cannot solve the problem with rate hikes in 2026. Instead, they must focus on managing the balance sheet and liquidity. In contrast, global AI memory demand remains robust. Korea's KOSPI index has surged roughly 80% so far in 2026, driven by memory chip demand and government-led market reforms. To secure supply, memory customers are asking for 5-year fixed-price contracts. This suggests a structural shift in the chip cycle, smoothing out the typical boom-bust dynamics for hardware suppliers. However, not all hardware giants are safe. A valuation critique of Apple indicates its intrinsic value sits 60% below its current market price, based on a sustainable 7% long-term growth projection. This valuation risk explains why Warren Buffett's Berkshire Hathaway has been steadily trimming its massive stake in Apple, signaling that smart money is taking profits as growth slows.